My name is Wayne Dean. I'm Vice President with McGriff Insurance. My colleague Erin Walters is with INSUREtrust. We're going to go through a couple of slides and then a couple of notes. We do have a mic up here. If you have a question, this is going to be, I want this an open forum, so please ask questions as they come to you so we don't have to wait till the end. We had a really good session last hour with a lot of questions from the audience, so please stop us. We'll run a mic out or pass it along. We'll touch on a couple of these topics about our day-to-day operations, analysis, market trends, claims, incident response plans that we didn't touch last session, but we'll touch on this session, and how it relates to your business. As I assume everybody in here is consultants for the most part. I think we had one manufacturer last time. Manufacturer? Okay, we have two.
Yeah, you can have integrators, manufacturers,
right.
Consultants.
Yeah. So we just did this presentation of a few weeks back to a lot of integrators. So, but it applies to the same concepts for consultants and manufacturers. So, our firm, McGriff Insurance, fifth largest insurance brokers in the U.S. The PSA Security hired us 5 years ago to be their preferred vendor on the insurance side. My group and my office is outside of Atlanta, Georgia. We've got offices around the Southeast, but my team, we have a holistic approach. We're not just doing cyber and E&O, although the topics today, and we specialize in those with the help of our colleagues in INSUREtrust, and which leads me into what they do. They're a wholesale broker. They have the contracts with a lot of the insurance companies that sell cyber, that sell E&O. As you see up there, 2017, 2019, they were advising Broker of the Year. That's a phenomenal award given to the top broker in the world. So their firm achieved that twice, and that's pretty outstanding. A little note on INSUREtrust. Steve Haas is their CEO. He is the founder and the originator for a cyber policy in 1997. So, 97, right? Mm-hmm. So he is kind of the grandfather, the godfather, we call him in the cyber world. So AIG had him manuscript the first cyber policy. So they have obviously a lot of experience. Let me get to. So we'll talk about cyber risk and liabilities. I'm going to give you a couple of facts here. 2008, over 400 million cybercrime dollar amounts were impacted during that time frame. So as you can see, obviously it's out there clear. 45% of small businesses are required to buy cyber to comply with contracts. We could talk about contracts a lot. We did last hour. It's coming. It's here to stay. Customers are hiring risk managers to help their risk transfer, meaning that they're passing on all the risk to you guys consultants, to the manufacturers, to the integrators, and we do not see that stopping in the near future. So a lot of the requests that we get as the broker is because of the contracts. So whether or not you want to carry cyber or not, it's coming. And I don't know how many in the room do carry cyber liability. Every 14 seconds is a new victim in ransomware, 11 seconds by 2021. These statistics are real, and 1.5 million new phishing sites are created every month. Ransomware attacks coming from phishing emails increased 109% from 2017 to 2019. We'll go through some claim scenarios where you'll see some phishing cyber claims that impacted our clientele and others that we found. Ransomware attacks have increased over 97% over the last 2 years. State of the cyber market, and I'll get Erin's input on this too. It's basically a race to keep up with the hacking activity. I mean, they're changing, and every time we find a solution to cover it, there's a new hack crime created that is not covered. So insurance companies are quickly trying to adjust their policies, Internet of Things, and race to innovative technology and innovative coverage. 170 carriers, and this is where I'm going to get Erin's input, but that's a little misleading. I think there's 170 that offer cyber coverage. There's about 20, in my opinion, that do it well. And unfortunately, that 170 is really the property and casualty carriers out there, the Travelers, and Hartford, some recognizable names, Zurich, that offer some coverage within their program, and it's on a sublimit basis, and it's not a true cyber policy. So I think the one thing that we advise, and we certainly want you to either reach out to myself or Erin or to your insurance broker, is to understand what coverage you're buying. Don't assume you have cyber just because it has $100,000 of coverage listed in your general liability or property coverage. Typically it's in the property coverage, but what they call a package coverage. We see that often. I made this comment earlier today. There's contracts out there where, assuming that they have the same limits as the property or the general liability, and because they have cyber listed in their policies, that they assume they have the coverage. It's not the case. And if you're sending out certificates, your broker sending out certificates, you're non-compliant, and non-compliant can be a very damaging process with fines, et cetera, and obviously get kicked off a job. Cyber first carriers, do you want to comment on the 170 by chance?
All right, so I would agree with Wayne. There are 170 carriers. Not all of them know what they're doing. Not everybody does it the same way. Actually, no two do it the same way. So using an agent or broker that is familiar with the market is important. Not buying just on price is important. What you're buying, you need to know what you're buying, because everything is done differently. And with the emerging exposures, in the market and with technology, things are changing on a monthly basis, not on an annual or 3-year basis like some of the other insurance policies. That's why my company does what we do all day, every day, to stay on top of that and to stay on top of the market. But we do work with specific carriers that we know are stable and that are going to be around with the claims that we see trending. A lot of these 170 carriers are going to go away. Mm-hmm. But right now we're enjoying a soft market and everything's super cheap. So. Yep.
Yeah, it's cheap in our minds, not necessarily in y'all's minds.
So you mentioned a couple that we should avoid.
Mm-hmm.
Who are a couple of the 20 that you think are actually good?
So our top carriers in this space are AIG, Beasley, Chubb, XL,
CRC or
CFC, which is a London market, mm-hmm. CNA,
Hudson.
It's more on the package basis. We don't do standalone.
Yeah, that's true. One thing too to be, and we can get you a list too.
Yeah.
I'll get you a list of some of the top markets out there. This is her expertise when it comes, because we submit it to them and they usually go out and get those markets. Is find out when you're asking the question to your broker, or if you're as a consultant and you're dealing with your customers, find out their claims process. Find out what these carriers do in terms of a claim, how the claim is processed. Do they have a breach coach? Do they have somebody that's going to come in and give you free consultation for a couple of hours? I mean, I can't tell you how many times, and we're blessed to have some great markets that have come in and given my client 2 hours of consultation and not fixed the problem, but it would have been a lot worse because my client wouldn't know what to do. Find out, what attorneys they're using, because obviously you're paying for this in terms of your premium. And a lot of times clients come back to me and go, I want to use John Doe because he's been my attorney for 20 years. We play golf every Wednesday together. And I said, that's great, but how much experience does he have in a cyber claim? How much forensics? I mean, does he know a forensics expert out there that's going to give you, the right procedures to go through and find the penetration where the claim happened? I mean, these are things that you've got. Notification costs. Everybody in this room is from different states. I'm from Georgia. The fines have decreased, but the notification costs used to be 30 days. So if you didn't have a notice out to your customers that you had been breached in 30 days, you were going to be fined. And I think fines were averaging $150 to $200 a day until there was a case. We'll get into some claim scenarios, but there was a case with a orthopedic doctor that had 10 locations, and they were breached. Obviously, with the medical records, it was a a very important process. One, they didn't carry cyber, so that's problem number one. Number two, they ignored it for months. And I think that claim has now risen to about $18 million. So it's put them close to being out of business, but not all the way out of business.
And I think the other point as far as markets is not every market is for every industry. So there are certain markets that do things better in manufacturing than other markets. There's from a business interruption perspective and from a crime perspective, cyber crime perspective. So that's another thing is like not every policy is different, every market is different, they have different appetites. So depending on what your business is, there's going to be better fits for you in that industry as far as how they write your risk. So it's important to have those conversations as well.
Yep. This is just some statistics for you on the average breach cost. Some of this has come down over the last, since 2019 started, but you can see crisis services, legal defense, legal settlement. I mean, these are large amounts and can put people out of business, companies out of business. So it's important to really identify, to Erin's point, the right coverage, the right carrier, even the right broker that understands these are things that you have in the policy. We'll get to the basics of a policy here in a minute, but here's some more data for you. Cost of phishing event, $93,000. Average cost of ransomware attack. Ransomware is on the rise. We talked about it earlier in a few slides. It's here to stay, and it's happening all the time. We're getting constant phone calls from our clientele with these types of attacks. Average cost of business interruption. Now, this is a good point to bring up when it comes to business interruption. As a consultant or a manufacturer, especially in the manufacturing world, business interruption is on a property policy. So if the building burns down, all my inventory that's sitting in there or all the product that I've got shipping out is going to be covered under what they call business personal property. But the loss of income is vital to a retail type organization or a distributor or even a manufacturer where their revenue is generated on that product. So the same thing applies to cyber insurance. If you're attacked, this could be vital to the system being down. You won't be able to perform your services. You're liable on your software. How are you going to get your service techs or manufacturing orders in? So I would say of every 10 policies that we do a review for, and Erin, you can chime in too, I probably see 5, about half is business incomes included. And that's just because it's been a throw-in. So brokers and carriers aren't necessarily on the same page. And I know that clients out there, manufacturers out there, don't understand that. They assume business income applies to the property.
Yeah, I would say it's definitely been the biggest uptick in where losses are being paid. Mostly in the ransomware perspective, because of a ransomware attack, it shuts down systems. You either have the loss of income from not being able to operate, or a lot of the expense and cost is coming from the extra expenses that go along with recreating data, recreating servers, recreating all of that that you need to do in order to get back up and running. And that all can be covered under the policy if it's constructed properly. But it's one of the newer coverages in the world of cyber. It's not that new, but it's being used a lot more, and so it's important that you have the right coverage in that space, both on the business interruption side and the contingent business interruption side, which we'll get into. But it's, again, varies widely by carrier, so you have to understand what you're buying.
Yep. We had a situation with a client of mine in Phoenix that had a breach. It actually was had come through ADT. ADT had been breached. One of their emails had obstructed my clients and put malware on their system. They were shut down for 7 days. 7 days didn't seem like a lot of time, but when we peeled back the onion and we started looking at what kind of revenue loss we had, I mean, it was close to about $150,000 of items that were pending, whether contracts related or pending customers that weren't able to get the job because they weren't able to either start on the design project or finish what they had started. So that actually one contract had moved to another integrator. This was an integrator in Phoenix. So just keep that in mind as you take this out to the real world and start talking to your clients.
since most of us do risk analysis,
Right.
most financial institutions will tell us that they can be down for a maximum of 3 days, which puts that into even more perspective.
Right. That's right.
I'm falling down on the job.
Doing risk analysis, we've found most financial institutions tell us that they can be down for 3 days without going out of business, but that's their limit.
That's a short time. We do that. There's a business income worksheet on the property side, so you can tangibly put the dollar amounts on the table of what's inventory, what's retail, what's sold, the gross amounts. All those things can go into net amounts. It's hard to do that in the cyber world. There is no true business income worksheet that you can fill out that says, if I'm down, to your point, 3 days. They rely on you to tell the analysis to say, this is my max dollar, this is my max day that I would be down to. Now this, in my case with my client, we were down 7 days. We did have backup. We were able to get back out. But you're talking about taking the service trucks in this case out of play because they couldn't upload the system to get to the jobs that were already signed contract to do. They weren't able to really do any day-to-day work because their systems were down, their emails were down. Gosh, we all know that it's hard to live without email. I don't know how we did it for so long. So it's one of those things that all those things you can put a tangible dollar to and can hurt you. Sorry, let me go back one. Leading threats to data. Obviously, the number one reason why we have breaches is employee mistakes. There are really, really good companies out there. Erin can tell you some of those, not necessarily right now, but just in general, if you ever want to reach out to one of us, that do penetration tests, that do all kinds of malware testing, phishing
and
email.
phishing testing.
Yeah.
Employee mistakes, I mean, the number one is they click on what they're not supposed to click on. And you can tell them 8 ways to Sunday not to click on something, and they still click on it. Phishing campaigns help that to bring down those rates, so they start knowing what to look for. But the bad guys are getting smarter, and it's really hard to tell sometimes. But that, I would say, employee mistakes, clicking on a link is usually the number one thing that's causing a problem. It used to be, and we still have the lost laptops, lost thumb drives, lost paper files, that type of thing. But it's really that clicking on the link. And I will say that this slide next year will probably look a little bit different in the fact that the severe uptake in ransomware. And ransomware is just taking over.
Yeah, and I'll give you, I was in it was an insurance-related class. We had a guy come in who does penetration phishing testing. He was from San Francisco, and he had come in and he was giving us some data. And I don't have all the data exactly with me, but he went to a university and he did a test run at a major hospital. And in both cases, he gave us some data. In the hospital, he sent out about 1,000 emails that were phishing emails. I think he got back 250 that had clicked on the link, and I want to say somewhere in the 85 to 100 range actually gave him the user ID and password, because the link actually requested, please provide us your user ID and password. So obviously, that's a major no-no. In the university was even worse. I think it was 285 or so teachers, all the way down to the janitor, whoever has access to email. And I want to say, like, of the 285, 100 and something clicked on it, and like 80 of them gave them their user ID and password. So it's out there. These are the other threats that are hackers, system malfunction, malicious, temporary contract workers. Oh, sorry, question.
So I had a question regarding your comment about ransomware being on the rise. Is that specifically the cost implications of each ransomware event, or the actual frequency or number of ransomware events?
Both.
Okay.
So we're seeing the frequency increase significantly, and we're seeing the demands go up significantly. When ransomware first started, you get demands for $20,000 or $5,000, $50,000. Now you're into the millions. I had a manufacturer don't know, 10 days ago, $400 Bitcoin, about roughly $4 million demand that came through. So.
Great. And then on your slide here, when you identify employee mistakes, I love that you identify malicious insiders separately from that.
Correct.
You know, they are employees. But would I clarify that the temporary contract workers are malicious or mistake or both?
I think it's both. You know, the most probably prominent of a temporary contract worker that's been in the news lately is Capital One was breached by an AWS employee that was working for them.
Malicious for sure.
That was malicious.
Yep. And we talked a little bit about this earlier, but subcontractors are so vital in the integration business, not so much in the manufacturing world because you guys are selling to the integrators and consultants, I mean, everybody needs to be checking what subcontractor or what other employee or other companies are working on your behalf. So what happens is that you as the manufacturer or consultant, you have a situation pop up where you haven't identified, they either have procedures in place for their own company, this is a subcontractor, or they don't even carry insurance at all for cyber related incidents. And it all falls back on you. And if there's nowhere for them to subrogate or there's no risk transfer, then you're not going to get any, you're not going to find ways to recover those monies. And for the most part, the insurance companies are going to pay. It's not that you're not going to get coverage. It's just they want to see the procedures in place. And really, that's not, somebody asked earlier about a premium savings standpoint. It's not so much that it saves you in the premium. It's just it opens you up to more of the markets. You know, we talk about being only 15, 20 markets. You know, if you're down to 4 or 5 markets because you have no procedures in place, no security, physical security in place, you do no penetration testing, you do all of you don't do any of these best practice procedures, there's probably 10, 12 carriers that say, I'm not interested. I'm not going to be on the hook to make you to do that because you're going to be subject to a crime here sooner than later. This picture probably is hard to see, but types of threats and impacts, nation state, organized crime, activists, and insiders on the left column. Those are kind of where we're focused. You will get a copy of this. It'll be uploaded into, I think there's either a YouTube video for this or something where you can have access to all of this information from what Ray told me. So I'm not going to go through all of this because it's even hard for me to read from right here and I have young eyes. But, you know, just gives you some ideas of the threats and impacts out there.
And on this real quick, on the nation state, there's been a lot of things in the news over the last few months about is cyber worth the paper it's written on?
Oh, yeah.
Because of the Mondelez claim with Zurich, because Zurich denied us cyber terrorism.
Is everybody familiar with that?
That was the question.
Yeah, so
He was ready for it in the back.
Zurich denied a cyber terrorism event. Well, let me rephrase that. They had a property policy. It was not a cyber policy. Property policy with Zurich, $100 million or so in limits. That had a cyber component in it. Wasn't meant to be cyber. Had offered apparently, and we were not the broker on this. Apparently, had offered them standalone cyber for many years. They said no, they didn't need it. This claim came in, and originally I think was going down the road of being covered. And by accident. I mean, Zurich was going to be on the hook for a lot of money by accident, not what they underwrote to or charged for under this property policy. However, then the US, France, I think 2 other countries came out and said that this was an act of war of the Russian government against the Ukraine. And as soon as they said that, Zurich looked at their property policy has a war exclusion.
Yep.
We're out. We're off the hook. And so, yeah, so that, but it got portrayed in the news and in the media that it was a cyber policy that excluded it. Is it, you know, if they don't cover cyber terrorism, why would you buy it? Every cyber policy that you buy should have, and if it doesn't, it's not worth the paper it's written on, a carve back to either not have a war exclusion or a carve back to the war exclusion specifically covering cyber terrorism, whether by nation states or anyone else. So that is a key component, key coverage component. But That's what cyber is intended for. I mean, even Zurich came out because they have a cyber unit that came out to specifically say that on our standalone cyber policies, this would have been covered. It's just not intended to be covered under the property policy.
That was way misrepresented.
Oh,
Extremely
110%.
And the phone calls and the emails started immediately. Coming into our offices.
So relative to that, my experience is when you do read your insurance policies, almost always it just lists what isn't covered, not what is covered.
Oh, no, I mean, it does list what is covered. It's just a matter of knowing how to read it, and everyone's different. Some do it modularly, some do it in churning agreements. So it's getting through that and then getting through the definitions, which is all part of it, and then getting to the exclusions of what they're excluding from what they just said they covered. So it's just a matter of understanding that.
So for lay people like all of us,
You need
what's your recommendation? I mean, you can talk to your broker.
Yeah.
I understand that, but you really need to understand
Make sure the wording-
what you are and aren't covered for too.
Right.
And so if every insurance company handles it differently, it seems like it's...
I mean, that's where you really got to rely on your broker to be able to explain to you exactly what's covered, what's not covered. And every incident's going to be a little bit different, so they're not going to be able to give you like hard and fast, but they should be saying it's intended to do this. It definitely does not do this.
Yeah, so I think most brokers ought to be able to do that, and we certainly do rely on that.
Yes, and I want to give you a tangible example that just happened to me in recent weeks, to your point. I know he has a question too. Well, they have it on the video. So a client of mine who's an integrator, actually they're partly integrator, partly electrical contractor. That term can be very gray. They bought a cyber policy from us about 9 months ago. And the name of the company I'll leave out just because this is on film. We're going through the claim right now where we intended the coverage to apply to certain areas. And the term is invoice manipulation. We'll talk about it in just a minute. It is probably right now the most gray area, I think, and I think Erin would agree with me, in the cyber world. I think it's called invoice manipulation. And I'm going to explain it to you in just a minute. So the case that we had was they had $216,000. So their system was compromised, unbeknownst to them. They had, over the weekend, which is typically when criminals kind of get in, holidays, nighttime, things like that, where you're not watching your email. They had an email set up, they got into the accountant's email and they fired away an invoice for $216,000 worth of work to another large contractor in Illinois. This customer was in Atlanta. That customer, without going through the procedures, said, okay, they got a new bank because the email had an invoice, listed my client's name in there as a new bank account, new routing number, new banking number. That money was sent to that new bank account, and therefore we have a claim. We have lost monies, and in the world of cyber and insurance companies, that's an uncollectible dollar. So it became a big issue for my client. So we went back to the policy. We filed a claim against our client, against our carrier, and we, under the computer fraud definition of the insurance policy, it said money stolen by another party, put into a bank account with your name on it. Everything fit the bill, except for the insurance company said this account was not set up in the client's name. The invoice said it was, but the bank account wasn't. So this is not a knock on insurance companies, but in this particular case, they were looking at excluding it more than they were looking at covering it. And there was some reinsurance issues and things like that were involved. So we went back to the crime policy, and under the crime policy, we had written a policy that had invoice manipulation under the crime policy, so you can buy it two different ways. And that policy had $100,000. We've been able to recoup $100,000 because in invoice manipulation coverage, there's sublimits that carriers give you up to about $250,000. So we've recouped $100,000 of that $216,000. But The intent for us to cover that was under the computer fraud because they would not list out invoice manipulation as a separate line item on the policy. But when it came back to the claim scenario, we had a situation where they basically said it's an account receivable, and we don't pay account receivable insurance money. So it's an uncollectible amount. So does that make sense? Erin, did I say that correctly? You kind of been somewhat involved in
Are we still arguing on that?
Yeah, oh yeah, we're still arguing.
Yeah.
We're going to argue until I get it paid. But we've there's some reinsurance issues in London and things like that we've had to fight. But the intent, and that's why I go back to your question, the intent for us to cover that was under that language of the computer fraud part of the policy. I still say I'm right, and the carrier even somewhat agrees with us, and the help of INSUREtrust, we're moving in the right path. But thank the good Lord we had invoice manipulation under the crime policy, because truly it's a crime policy. When money is being stolen, it's a crime policy. It's employee theft. It's tangible money. That's where that policy, that coverage is specifically supposed to go, but it's kind of bled into the cyber world, and now cyber and crime carriers are both like, wait a minute, did you have it over here or did we have it? So it's kind of a unique situation. Let me get his question real quick, Sal.
And to expand on Lorna's question, my question was, is there kind of a common taxonomy within the insurance industry or legal industries to define, what are these different events? What are these different threats and incidents, so that when you put that in, your riders, you put it in your policies, we're all talking the same language, same definitions versus one underwriter's interpretation of a definition versus another.
Wouldn't that be nice?
Yeah.
That's, no, everyone does it differently. Everybody says it differently, calls it something different. Honestly, that's why I have a job, I guess. It's the broker's job to delineate between them and to be able to explain it and break it down to what this carrier doing here is what carrier B is doing here. We try to make it as simplified as possible for our insureds so that they don't have to read 14 different policies when they're looking at two to go with. But I don't see, with the different state laws and the different state insurance departments, I just don't see it ever becoming, and every carrier wanting to differentiate themselves.
Yep.
So they're trying to differentiate themselves. They're just making it more complicated for everybody else.
So ironically, we went through our insurance renewal last week with this client. And I actually brought it as an example because I figured somebody might ask me to show something. But we went through the crime policy and we defined every coverage in that crime policy for the intent to write what we were trying to accomplish. We went through the cyber policy and we wrote out all the check marks on that policy with the intent that we cover it there. So now we have written a policy that includes invoice manipulation at $250,000 under the cyber policy, and we've kept the crime policy with invoice manipulation at $100,000. So now my client's got $350,000 worth of coverage. So we've closed that gap for any issues.
Yeah, so along the same lines, so how about phone fraud, right? Is that so you need to have that under a crime policy as well? It's a different kind of phishing attack, basically.
Phone fraud? Is that what you said?
Phone.
Yeah. So telecommunications fraud is covered under most cyber policies under supplement, usually because it's a VoIP, and so they're hacking into a system. And that's usually covered under the cyber policy.
It is. Okay,
yeah.
Interesting. Thank you.
Mm-hmm. You have a question? Okay. All right, so we've talked a lot about this a little bit already. Why do I need a full cyber insurance policy? Well, contractual requirements are basically what's driving a lot of this. Weak coverage on the GL, so we've kind of touched on that. Anybody in this room that carries cyber, or any of your customers that carry cyber, they do not need to cover it under their GL policy or property policy. We've already given the example with Zurich. So we need to buy a standalone policy. What am I getting for my money? We've talked about some of this already with the value other than the loss of data coverage. Driving cost of breach down with expert vendors, pre and post breach resources, vulnerability reports, upfront claims assistance. I think the last one is absolutely vital. vital. Just the consultation you get with these insurance companies, the breach coach, everything that goes on. Incident response plans we'll touch on here in just a minute. I brought a very, very good example if you want to see it afterwards of one that is being executed. I think it's crucial for every, and you can, as a consultant, this can happen to your own company. So this is a situation that you need to have the things in place for these incidents to happen. One, because if you call your insurance broker and he's at a conference in New Mexico, I can't get to the phone until after I do a presentation. So that's the number one answer. I always ask people, who are you going to call if you have a cyber breach? They say, well, I'll call my insurance guy. I'm like, what if he's not available? So we need to have a game plan in place for what happens for the next steps if you have a breach internally or one of your customers has a breach.
And I think, the key here too is when you're looking and evaluating your insurance carrier, it's not just cost. Obviously, that's important. Coverage, very important. What am I actually getting for what I'm paying for? But in the cyber world, the pre and post breach services vary widely between carriers. So many will offer you, of the 170, will offer you none, but a lot will offer you a lot. They'll offer you pre-breach services, phishing training, vulnerability scanning. I mean, anything you can think of, they'll offer usually for free, if not for a discounted rate, because they want to make you a better risk. So understand the uptick for people that actually use these services, it's in the single percentage. I think mostly because the insured doesn't know that they're available, or the insured who's buying it doesn't communicate to their IT folks that it's available, or HR, whoever's handling the process. So ask that question, what services are included in my policy? And then on the claims handling side, what services am I getting on the claims handling side? And how experienced are the claims handlers? And another key question to ask, do you have required vendors? There are certain carriers that you only can use their vendors. You only can use their forensic vendors. You can only use their attorneys that are on their panel. No questions asked. They don't care who you are. There are other carriers that are more open, have their panels, but are open to adding someone. That's something you should do upon renewal or upon purchasing the policy, so that you're not trying to negotiate that when you're shut down by a ransomware attack, because it's a lot more difficult to do at that point. So just things to keep in mind when you're looking at and evaluating your cyber carrier.
And Erin's right. On the front end, do that with the carriers because it's harder to do it after the fact that the policy is implemented and you've already paid the premium. But I will say part of the incident response plan is to identify the attorneys, your consultant, or you guys be named in that incident response plan on the front end too, because then you can go and take that to the insurance company and say, here's my plan. Now I want to manuscript this as part of my policy. These are the people that I want to use, and I want you to vet them, or I've already vetted them for you. So it's good. And a lot of, in our world, for what we do, between Erin and I, we recognize some of the top attorneys that are involved. I've got too many cases going on where I start to identify who, from a legal standpoint, knows their stuff. Now, it does vary state by state, but for the most part, most of these attorneys that I've dealt with are really sophisticated and not only know the law, but they know the insurance coverage. I think that's something that's absolutely vital. If you're going to have an attorney, you need to have him understand what you've got in place so that he can help execute it.
So do you have a sample of this plan that
I do.
we should have in place?
I do.
That I think would be useful to
I
this
do.
group, because most of us are pretty small companies, and so
Right.
we may or may not have any clue how to approach it.
Yeah, and happy to provide. We have those services as well. I would say most carriers have a e-risk type portal that you have access to. You may or may not be aware of that, but on there are best practices, sample incident response plans, sample employee training, that type of thing. So I'd ask your broker, does XYZ carrier provide these services? Because it's better than going out and starting from scratch. You might as well start from a good base.
Yeah, they don't cost, they're not going to cost you anything.
No, it should be included, but most have portals included with their policies.
But I can tell you this, most of the feedback I get, and this comes from the manufacturing world a lot of times, is I get, go see my IT guy. He'll fill it out. I'm like, no. I need your input. He doesn't know who we're using from a litigation standpoint. He knows how to take care of the system. So that I would say for every 5 that I do, about 2 or 3 of them, they'll say, go see my IT guy. He'll tell you what we need to do. I'm like, no. Do I have any cyber coverage? So where is my cyber coverage? We've talked about it. You need to know if it's included. Where do we have a separate policy? We talked about anybody in here has had a cyber incident response plans. We talked about the E&O earlier, and for those that were not in that session, the best product out there right now from a cyber liability standpoint is a blended product with your errors and omissions. Your professional technology E&O, manufacturer's E&O, miscellaneous E&O, all those things, mostly tech E&O is what we typically blend in this space. But it's absolutely vital that you do that for a couple reasons. I'll name a few. One, it comes with the same pocketbook. So the biggest gray area we always see is, was it the design of the project that caused the issue, or was it the implementation or the installation of the project? Or was it the manufacturing product? I keep pointing back to you with your own manufacturers, so I get to call you out, or 2 of y'all. So, was it the manufacturer's product that caused the installation to go wrong or the design to go wrong? So you need to make sure that you have those things in there. It's the easiest part is to go to a situation in a lawsuit with the insurance carrier and say, I don't care if it is an E&O or cyber, you got my coverage either way. Versus we've had incidents where we've had to step in to a situation. I wrote a cyber policy for a group up in New Jersey. They had a claim. It was actually an E&O case. We ended up writing the cyber monoline by itself. They didn't want to move their other stuff with the relationship they had. And we went back and forth for months over who's, we had to turn both in. I didn't know what was going on that side because I wasn't the broker for that. They didn't know what was going on our side. It was some of a disaster, but we ended up getting it paid for by the cyber carrier. But just understand what's in there. So this is going to tell you a little bit about the actual coverages that go into it. It's not all, but we tried to pick out the most important ones of it: privacy, liability, network security, electronic data, breach of privacy, some additional coverage considerations, notification costs. I don't know many policies that don't have that already built in.
No. So these are all coverage but notification costs are your notification costs if you have private information. So this is only for companies that have private information, which everybody has employees, so you do have your employee data, is the notification inside or outside the limit? So if you buy $1 million policy, is your notification cost eroding that $1 million, or do you have a separate bucket of money to provide those notification costs? Again, every carrier does it differently. So it's one thing to pay attention to. The privacy and network security, that's the liability side. That's the core component of the cyber policy. If you get sued because you release private information, whether it be personal information or third-party corporate confidential information, and they suffered harm because of it. The electronic data, that's been expanded to include all, electronic data, that's not the media. The electronic data coverage is the cost to reconstruct data or replace data that's been damaged or destroyed due to a network security failure. Breach of privacy. Cyber is not just the cyber world. It covers all data, whether it's in paper form or electronic form. So something to keep in mind for those still using paper. The notification costs, the forensic costs, crisis management, public relations, that's usually all going to be under one bucket or one list of coverages. And that's all things that you can look at to see whether it's inside or outside the limit. Again, where you're going to be looking to see, am I required to use certain vendors or not? The social engineering, that goes back to the cybercrime. That's a key component right now of knowing what you have and where you have it, whether it's under your cyber or your crime. Are they working together? And what types of social engineering coverage you have. Is invoice manipulation covered? You want to know what that is. Bricking. So this is, again, a kind of semi-crossover into the property world, but if you suffer a network attack and your servers or your hardware is not physically damaged, but it's no longer operational. So your servers are still there, they still look like they did before the attack, but you can't get them back up and running. That's the cost to actually physically replace that property. So if you think of any company that has a large number of servers or a large number of hardware, laptops, et cetera, that's the cost to replace all that hardware, which historically was not included, but that's now included under cyber policies, or can be, again, something to pay attention to. And the bodily injury, property damage, this is more on the contingent side. So if a network security attack causes some system to go wrong, that in turn causes bodily injury or property damage. So think about a sprinkler system that's controlled by a network, and it gets hacked and the sprinkler system goes off and damages property. It was the cyber attack that caused the property damage in turn. So that, it's usually small supplements. You really want to look at your property policies and your general liability policies to make sure they're not excluding that, because that's where you'd want to look for coverage first. But there are some small supplements that you can get under your cyber as well.
And again, all of these things, I mean, we're not, insurance talk is not always that fun. So this is to give you some material to go back, find out if you've got this internally with your own policies, and then as consultants, have these conversations with your clients to say, well, what are you doing to have coverage for cyber-related claims, E&O-related claims? Protect yourself by having your customers.
The one thing that's not listed here that's critical, especially in manufacturing, is the business interruption costs, business interruption and extra expense costs, because that's where we're seeing our manufacturers have most of their loss. They don't have a lot of private data, so they've always said we don't have an exposure. But if you're shut down, and one thing to look, a key component on the contingent business interruption side, so if you have a vendor that goes down, that then in turn causes you an income loss or extra expense. Every carrier does this differently. Some only provide you coverage if one of your IT vendors goes down. So if you have an IT vendor that goes down and you suffer a loss, then it will be covered. Other carriers will say any vendor. So for like a manufacturer, they're getting widgets from one place. The widget factory goes down, they need the widget to create their product. They have to then go find another widget maker. It's costing them extra money to do that, or they're shut down for a period of time because they're not in operation. That can be covered under this type of policy, but you got to make sure you have the right one. And that goes back to my point that every carrier is not right for every industry, because only certain carriers do that. So for manufacturing especially, there are certain carriers that are better for manufacturers than others.
Could I give you I've got an example of a serious damage situation that happened to a company that went out of business for protection purposes. And I'm not sure how all the things that happened to them would fit into these things. So I'd like to tell you about it and get your feedback on how that works. This was a sports car engineering company. They sold it's all aftermarket add-on stuff to cars. They were online. They were a big name. They had 2 racing cars. They had big name international drivers driving for them. They got $500,000 of sponsorship for their race cars a year and so on. At every one of their events, a drift car kind of event thing, they would pass out USB sticks that had scantily clad models on all the cars and all these kind of things that made the USB sticks popular for all kinds of reasons.
Right.
But so I had a relative who brought me one of these things because he owned one of the cars and he had some of their stuff on his car, and so he just wanted to show me how cool it was. I put it in, up come the red boxes. There are 3 different kinds of infections on the USB stick. And I said, where in the heck did you get this thing from? And he said, I got it from so-and-so. He got it from the company. It was a friend of his worked there, and they were passing them around and so on. And so to make a long story very short, they passed them out at the event. They passed them out to all their drivers, all their sponsors, all their friends. They passed them out to other people. All kinds of things happened. They don't even know where it went. They lost all their sponsorship. They lost the drivers. They lost the models. They lost every company they did business with that they gave it to, hurt their systems. I'm surprised they didn't get sued, but they basically came down to nothing, and now they're just one guy selling stuff online from home from a company that employed 40 people. So how does that, we think of it as attackers and all this stuff, but this
Right.
was the USB stick thing. So all different kinds of losses, what kind of things would be included and excluded in that?
It's a good question. One, don't ever put a USB stick in your computer that you don't know where it came from. But that's just number one. Two, did they create the USB sticks or did they get somebody else
One of
to?
their employees made it at home.
Oh, Jesus.
Oh, yeah.
Okay, none of these things are smart things. All the way along the line are things, nobody tested it, nobody checked it. I mean, all the way along the line, this could have been stopped at so many places. In fact, if my relative had come to me sooner, it could have been stopped earlier. But this was, they were supposed to order them from someplace with the stuff on it. A ball got dropped. What are they going to do? The guy says, I'll do it at home tonight. And the next day they were passing them out. So it's like, that's how that started.
I mean, a cyber policy would probably trigger out of that just because it's made by the employee. That's the one way out. It could be an E&O situation depending on
Yeah.
how the information got on there. Obviously, the employee got it, but where did it come from? Like, where did the
Yeah, because it
information
wasn't the insured's computers though. It wasn't their network.
No, it wasn't their network. It was
Yeah.
his network.
It was at home. So I think that's,
Wouldn't the question as to whether the USBs arrived with this stuff on it before he added the content?
True.
yeah.
That's a good question, but I'm assuming that they, based on, well, first of all, I can't go into all the details of everything, but based on what I understand, it wasn't a USB manufacturer problem. It was this kid's own computer
Problem.
It was
problem.
infected.
Yeah,
Yeah.
it was infected,
But
definitely.
he didn't do it.
Maliciously.
He didn't, he didn't consciously do it. It was just.
The only thing is that if they had done it on their network, like on their computer systems, I could totally see the cyber policy being triggered because they obviously had a failure of their network that caused the USBs to be infected, which then they passed along to others. But since it wasn't their network,
And they actually never put one of those USB sticks into any of their computers.
Yeah.
Which they should.
They should have, but that, otherwise they would have found out about it.
right? So
But they didn't.
since it wasn't their network, I mean, I think the individual is the one that's responsible. But I mean, obviously, he's not going to have
Right.
the funds to be able to cover that.
I mean, there could be fines involved to
Yeah.
the company.
But
I mean, they didn't put it in their system.
They distribute them, but that's a product. So it would have to come down to whether they had technology products coverage under their policy or not.
It's true.
But that would
And
be.
they didn't have any kind of policies for this at all, but
Yeah.
I'm just wondering if they did, what kind of.
Yeah, under like a technology products coverage, you could have coverage for that.
Okay.
So,
point.
so is that reason not to have people bring their own devices as a result, right? Because, or because, look, I mean, you said network, right?
Right.
So, but if it's bring your own computer to work, which you plug into the network when you're here, but then now you're back home, and so.
But usually when
I don't know that this.
when you access the network, you're hopefully on two-factor authentication type things, you're getting into the network and it's not actually touching your computer per se. So that's the best way to do it. But you bring your own devices. I mean, it is an exposure, but it's here to stay. I mean, that's not going to change. So
I mean,
it's just about how you let those devices access your network.
And
need to be
you
careful
wonder
about.
why we don't have enough data in the cyber market over a certain period of time, because these claims keep, the scenarios like that come up. There's no probably data to show us if it would be or would not be covered, because most people don't buy cyber policies in that regard. So there could be some fines and things that might be paid. I mean,
Like I said, if it was done on their computer system,
Yeah.
I think that the policy would be absolutely triggered. And if they have technology products coverage, but if they don't have any coverage.
Would it cover all those losses of the people not wanting to work with them, loss of the sponsorship money?
So that goes into reputational damage, and that is an evolving component of cyber coverage, is reputational damage coverage. So is that loss of income due to you having a large failure of network security or a large incident. that customers lose faith in you or take their contract somewhere else because because they don't want to work with a company that had this kind of exposure. So yeah, there's a lot of forensic accounting that goes into that to try to proof of loss, but it does exist. It's sublimited. You usually don't see more than $1 million in that coverage.
That's the next thing I was going to ask is the amount of coverage, because for them it was, I mean, you're tens of millions of dollars.
Yeah, no, this is usually, it's a newer coverage, and so whenever you see newer coverages, they're going to stay sublimited until carriers have enough data to understand what they're underwriting. At least the ones that actually still underwrite.
I missed one of the words in what you just said. Would you say it again?
So you're going to see a sublimit for new coverages that come out on these policies until carriers have enough data that they understand what they're underwriting and what their exposure is, and they can properly charge for it. You're not going to see high limits until they have enough of that.
Okay.
Not very good procedures, though. Don't recommend that. Cybercrime, we talked about this too, in kind of the opening, the fraudulent funds transfer versus invoice manipulation and phishing. I would recommend, if you're looking at your own insurance policies or you're having conversations with others, make sure invoice manipulation, fraudulent funds transfer is a name for it sometimes in the cybercrime and under the crime policy. But I would make sure that to identify what coverages you're trying to cover with these forms. Now, invoice manipulation did not even exist 2 years ago. There was nothing to be found to cover that. So now, as we approach these types of claims, the carriers are giving us sublimits of 100 to 250,000. Authentication challenges and risk management practices. Just make sure.
So on this, there's some policies out there that exist that for social engineering type claims, they say unless you have an authentication process that was followed, we're not going to pay. And up until about 2 months ago, we would have said, well, then that's useless coverage, because if somebody picks up the phone to say, is this a legitimate email? And the person says no, they're not going to then transfer the money. So how are you going to have a loss? However, apparently artificial intelligence in its ever-expanding world is able to manipulate and recreate voices. So there was an incident where a CEO's voice was artificially intelligence recreated. So they actually did call to confirm, and the hacker used artificial intelligence to mimic the voice, and they transfer the money. That's probably less likely, but that would have gotten around the authentication challenge exclusion. You don't want an authentication challenge in your policy. It's not worth it.
We'll go through, we got 5 minutes, and we'll go through here pretty quickly, get to some. We talked about E&O and cyber, the ones that miss E&O. You can find it online once it goes up there, but it talks about blending what's included in errors and omissions, media, network security, privacy. We'll skip over this page because we're running out of time. We need to get to some examples. Financial loss with technology, E&O, we've talked about it before. And you can get this at a later date. Claim examples. Okay, so for cyber, there's a PSA member, a client of mine, situation, integrator had an email compromise, hackers sent a falsified invoice and bank wire instructions. So it's exactly what I was just talking about. Should have wired $500,000, which was done. The third party wired the money as instructed. Much of the money was recovered due to red flags noticed by the bank. The initial cost for forensics was $70,000. This company was $120 million revenue company that without that incident response plan would not have caught this thing. It happened on a Friday afternoon in Texas, and we went through they went right down the order of the way we laid it out. I was the third man on the totem pole when it comes to who was being contacted, so they already had it in motion before I got a hold of it. $50,000 deductible, remainder paid under cyber. So it just talks about, just this is kind of a new thing, these invoices, and everybody is subject to that. Yes?
Should I wait for the mic?
Yeah, get your mic.
So
Just curious, so you got a few different audiences here. You got consultants, you got
Right.
I think, some integrators, you got manufacturers. Just coming from the manufacturing perspective, we are very risk adverse. As a matter of fact, you'll find in most of our contracts, our reseller contracts with those integrators, we take no liability.
Right.
I mean, the limits of liability are ironclad. It's use at your own risk. It's a great product. Use it, right? That puts a lot of ownership onto the delivering arm, the integrator. And these are, as Lauren has said up there, these are smaller businesses. I truly, genuinely worry about these folks in the integrator space. This is outstanding to see the partnership with PSA and actually taking on cyber insurance. So the question is how often do they take cyber insurance, or do they get that inherently when they work through sourcing products through PSA? So this is
Well, I mean, in the case of buying it, so Bill Bozeman and I, if anybody knows who Bill
a good
is,
friend of mine, yeah.
Yeah, Bill and I did we kind of took a vote of hands, really. It was in a room of how many people in the room had voted, had bought a cyber product. And about 5 people raised their hands in a room of about 100. And that was 3, 4, maybe 5 years ago. I can't remember the exact date.
And was that more than likely because the RFP asked for it?
Yes, but a lot of it was because either they were clients of mine or they contractually were obligated to do so.
Right.
It wasn't on their own. And to your point, a lot of them are small businesses. So it's just another expense they have to have, and they feel like they're bulletproof when it comes to, well, I'm installing it, it's not my responsibility once that happens. There's a whole lot of wrong with that statement.
Sure.
But now we're seeing more because the contracts are requiring them.
Right.
I think now, Bill and I were talking about this last week in Phoenix, we thought we would see, in the room of 100, we would probably see 60.
Okay. And just curious as well, is your primary contract purchaser the integrators today?
Mainly.
Mainly, okay.
Yeah, on our end. I mean, we deal with outside of that generally, but the integrators, yes.
Yeah.
For the PSA especially.
Okay.
Yeah,
Excellent.
PSA, but I mean, in terms of the claims, the examples that we have here, this happens to anybody. Anybody that's doing invoices, whether emailing out invoices or faxing them. I don't know who uses a fax machine anymore, but emailing out invoices or even mailing them for that matter. There can be ways for a cyber claim to happen.
Thank you.
Malicious code. We talked a little bit about this in the E&O earlier today. Failure to prevent introduction of malicious code. When uploading a new software program, integrating the hardware for a customer, malicious code is inadvertently transferred to the customer's network, causing widespread loss of data and disruption to the customer's operation. This ended up resulting in a cyber claim. The customer seek damages for the cost to reconstruct the data, as well as the financial impact associated with the disruption of business. That was the business income aspect of it. Yes, ma'am.
Question is, for the policies that you have at
Right.
PSA, are these integrators covered worldwide?
Yes. Yep. Now, there's other lines of business that you have to write international coverage for from that perspective, but for the most part. And Erin, do you want to elaborate on, I mean, all the suits are always brought back domestically, so.
So all cyber policies are worldwide.
Yes.
For the most part. However, if you have operations in certain countries require you to have local policies if you want to be indemnified in country. So as long as you're okay with getting paid back to the US and then distributing the money, there can be some tax issues or whatever with that. But if you want to get paid in country, for certain countries like India, China, there's a number of them, then you have to have a fronting local policy for that cyber policy. Or the other way you would have to have a local policy is that if you have a local contract with a local client that's requiring you to carry admitted insurance in that country. So just things to be mindful of if you're doing things internationally.
Correct. This example of social engineering, because I wanted everybody to understand what social engineering is. This case was I'll kind of give you, I won't read verbatim, I'll just kind of give you the outside. So this was an accountant that the CFO had been told to, or the accountant had been told by the CFO in a fictitious email to wire money to the bank. It had not gone through appropriately. It wasn't their normal procedures, and the bank caught it, called them, and it turned out to be a pretty nasty situation. Social engineering is an internal fraud case. So basically it's where your system is compromised. They have access to your CEO, CFO, accountant, maybe your CPA's information, and they send one email from another. So if she's acting as a CFO, I'm the CEO, they've recreated my email domain. They've sent an email to Erin saying, please wire this money to our new bank account, blah, blah, blah. And next thing you know, the money's gone from your customer sending it to another thing. So it's very similar to invoice manipulation with the intent that it has started and constructed by an internal employee. Okay, so we're down to basically a minute left. And incident response plan, if you want to stay after, I'll show you one that we do. But these are things that we put in place, risk transfer wise, vendor risk management, familiarize yourself with legal counsel. We talked about a lot of these things along the way. Train your employees or get out there and tell your customers to make sure that, and encourage them to ask their carriers, as Erin alluded to earlier, to get trained. You just become a better risk, and hopefully you don't have incidents. Right, that was it. Any other questions?
So can that impact premium at all? In other words, are there?
No. That's the question was, can that affect premium? Right now in this cyber market, like I mentioned before, it is so soft and competitive. We're bottoming out on rates. I don't know how it can get any cheaper. Will it eventually affect rates? Potentially. When we get to a harder market, when a lot of this capacity is gone after there's a huge, perfect cyber storm that brings a lot of these carriers down, I think we will get to a point where underwriters are actually paying attention to those types of things. It's more a best practice of, because when you have an incident on a Friday afternoon or on a Saturday, that you know what you're doing, you have your partners in place, you can respond quickly. For example, that the manufacturer I had that had the $4 million demand, they had backups in place. They knew how, they called their breach coach. They called us. They were able to be back. They tested their backups. They were fine. They didn't pay the demand. They were back up and running over the weekend. So, but they were, not the norm. Usually it's people freaking out, not knowing what they're doing and what to do.
But their premiums are effectively the same as someone who does bupkis.
So premiums are affected by your revenue, your industry class, number of employees, and amount of data that you hold.
Okay, so but not any of the security controls, precautions.
Now, what that's going to affect is probably how many carriers are bidding. There's certain carriers, the better underwriters out there are going to say, I'm not underwriting that because I see too much exposure. But right now, I'm just telling you the rates are so low, they just can't get any lower.
Is that the same for crime incidents, crime threats, or just cyber?
As far as the soft market, so yeah, where you're going to see on the crime side, especially in the cybercrime world, is your limits being offered and how much data or how much underwriting information you're going to be willing to pay. So it's not as much on a cost perspective, but there are asking more questions about what your policies and procedures are behind that in order to provide anything higher than that minimum supplement.
Yeah, and just to add.
Crime, not cyber.
Oh, traditional crime. I don't do traditional crime.
Yeah, I was just about to go to that answer.
I used to, but not anymore.
To give you, on the crime piece, you have so many other tangible products in there, like employee dishonesty, that drive up the premium because it's based on the number of employees versus in the cyber world where it's based on revenues. So you may have, a $10 million company with 200 employees, and the crime would be more expensive than the cyber. But a lot of the ancillary coverages that we're asking, the additional ones that we're talking about, the invoice manipulation, those aren't expensive at all on the cyber or the crime. So you just really need to identify and compare the two. And we do those comparisons. Like I'll put up, here's the cyber, here's the crime, here's what you're blending together.
So only other comment. So those of us who consider ourselves hackers would call the people that do this criminals.
Yeah.
Right. And so
point.
the idea that hackers are always the name of the
Right.
category of people that are committing cybercrime is generally understood, but there are a few people that are bugged by it. So
Black hat hackers. Can we do that?
exactly.
And kudos to Sal. He's one of the best in the business. We've done some panels together.
So I was trying to find it, and I can't find it fast enough. A couple of years ago, there was an initiative set up. It's got layers of agencies and all this by the federal government, but one of the things they were doing was officially encouraging insurance companies to base rates based on the kind of controls they have in place. Are you seeing any actual effect from?
Not on the, like I said, the pricing is so thin. It's so cheap. It's so competitive. Until that changes, we're not going to see any of that impact pricing.
So the client I showed you, I don't know if you remember, it was $500 and something thousand.
Yeah.
The premium went up $2,000. So they had a $500,000 loss.
Wow.
We recovered about $274,000 of that money from the bank. We had caught it in between. And then the forensics cost was $70,000. They had a $50,000 deductible, and their renewal premium went from $34,000 to $36,000.
And how much? From 30, that's what I wanted.
34,000 to
36,000. 34.
I mean, they're $100 million plus companies.
Right, so that's pretty reasonable coverage.
I mean,
Yeah, but they need to do that because it's so competitive. The next carrier down the road is going to be like, well, they just had a loss. They're probably a better risk anyway, so I'll write it
Now
for
they closed the gap on what they
32. You know.
So I wonder, time, I guess, will tell. If you have an accident with your car, I mean, they forgive you the first one, but then after that, the rates go up.
Right.
But there's not enough history of stuff in the cyber thing.
Right, and if you have a limit loss or something like that, like you're millions and millions of dollars, you're going to see more of an increase. But right now, it's just the smaller losses aren't driving the market.
I'm going to get a car fee and I'm going to send you an incident response plan. I think.
And when you say smaller losses, what's the?
So they might hit the layers, but if it's under $1 million.